GST law with basic reference to fake invoicing cases. And I'm thankful to Tax Guru for awarding this opportunity to deliberate in this webinar basically. So let me share the flyer and let me straightway go to the topic of discussion. Yes. Yes, I think it's visible now. So today's topic of discussion is important issues in input tax credit and handling notices in case of fake invoicing investigation. See, nowadays, every now and then we are witnessing cases relating to fake invoicing, big cases, not in crores, but in hundreds of crores. Recently, we have seen news reports wherein during this registration drive, verification drive, a very big network of fake invoicing has been unearthed by the GST department. So these issues affect us in a very major way, because these are not only affecting the criminals, means those who have perpetrated the crime, but those who believe in these people who are basically under the fake, who impersonify themselves as a trader, as a genuine businessman, but they evade taxes and they perpetrate fraud on the department and on the honest taxpayer by various means. So today we shall discuss basic concepts of fake invoicing and how these types of crimes are perpetrated and how we can save ourselves. Further, we shall also discuss that in case we are fixed by any fraud, we are the victims of any fraud, how to defend such cases and how to save ourselves from such frauds. So these are basically the news reports which we get on regularly these days. So what is a fake invoice? See, prior, when the GST law was enacted, there was no definition of fake invoicing as such. Even now, the law does not have any definition of fake invoicing. Okay, law does not have any definition, but an SOP was issued in 2019, which discussed the basic nitty-gritties of how to identify a fake invoice and what shall be termed as a fake invoice. So though there is no legal method of identifying fake invoicing, but yes, this SOP has given a very logical idea of how to identify a fake invoicing. The gist of that SOP might be maybe summed up as under, that is, in case there is supply of goods without where there is issue of invoice without actual supply of goods. That means invoice has been issued, but there are no underlying goods. So in that case, it is termed as a fake invoice. The invoice which is issued, that is termed as a fake invoice. The other case, invoice issued, but there is no tax payment. So that is also termed as a fake invoice by the government because there was no intent to pay tax. Okay, what are the types of fake invoices? One is underlying goods or services are not there, means only bills were traded. One person has issued the bill and the other person has accepted that bill. So in that case, there is no underlying goods or services. Maybe the e-way bill has also been made, but there was no actual transportation of goods. That means the vehicle might not have carried the goods which are underlying these invoices and e-way bills. Okay. Diversion of bills. What does diversion of bill means? Diversion of bills means that I have stock in my books. I don't have it physically. I have it in my books. So what I do, I issue a bill without underlying goods or services. Okay. So in that case, it is a case of diversion of bills because the goods which that person has purchased, he has sold it to some other person through kacha sale. And now he has stock in his books. So now he sells the bills. So that is diversion of bill. Shell companies and shell entities, So shell companies and shell entities are not only limited to accommodation entries. They are also now indulging into these GST crimes, and in a big manner. So these are basically the three types of commonly found methods of fake invoicing. How a fraud is committed. See, there is a huge channel. There is a big channel of shell entities or basically units which indulge themselves into fake invoicing and try to make the ITC genuine. However, when a deeper investigation is done by the department, the things become very clear because the filing is okay. They are doing their all filings, GST or one is filed timely, 3B is filed timely. But there is no underlying supply of goods or services in those cases. Okay. So what happens? A is the first entity. Like it might be a very small entity, very small. It sells, its turnover might be in lakhs. Likewise, there might be many other entities, A1, A2, A3, A4, A5. Okay. They sell to B. Okay. Now A does not purchase anything. A does not have any genuine purchases. It is just a dummy created by someone, some fraudster. He files the 3B by claiming fake ITC, and then he passes it to B. B takes the ITC, passes it to C, C to D, D to E, E to F, F to G. All are basically part of this network. Okay. Finally, H passes on the ITC to I. I might be a genuine person. But you will now think that if I is a genuine person, why is he purchasing a bill? See, there is an issue in this one. We'll discuss the case, how I might be a genuine person also in this case. Okay, so this is how a normal fraud for fake invoicing is committed by the fraudsters. We need to understand, if we are a professional, if we are a businessman, we need to understand how such frauds are committed so that we can be vigilant. Okay. Motives behind issuing fake invoicing. What are the basic motives? The first one, avoiding cash payment of GST. That we all know. Cash payment is coming, so the normal businessman thinks that, okay, I can purchase some my bills and I can avoid my cash payment. That is one motive. Converting excess ITC into cash, so that he wants to pass on to someone and take the cash back. That might be one motive. Inflating turnover. Now, this is not related to basically GST. Means the intent here is not to evade GST, but to increase the turnover for various motives. Bogus expenditure to reduce income tax. Diversion of funds and money laundering, which is out of these 6 motives, the most grievous crime is money laundering. However, with each and every motive, money laundering cannot be ruled out, as money laundering is inherent in every crime. So these are the basic motives behind issuing a fake invoicing. Now, how they we have to understand one thing. Suppose there is a bill of 1 lakh rupees. GST is 18,000. Okay. Now, how they cause loss to the exchequer, let us understand that. They purchase a bill of 1 lakh, GST is 18,000. Okay. For that 18,000, they might be paying some amount to the issuer of that bill. Say 5,000, 6,000. Let us take 6,000. So he has a benefit of 12,000 of ITC with him, which he uses. So in this case, how much loss the government has suffered? 18,000. 6,000 has gone to some other person as commission, but the government has lost 18,000 as GST. Okay, this is one aspect. Now this 1 lakh rupees which he has claimed as expenditure in his books, he's saving income tax there. Let us assume an average rate of 20% income tax. So 20,000 he has saved there. How much tax he has evaded from the government exchequer in direct and indirect taxes? 38,000. So for 1 lakh rupees bill, he has saved 38,000 and caused a loss of rupees 38,000 to the government exchequer. So it is in this way that the economy of the company is being looted by these unscrupulous people. Now, what are the consequences of fake invoices? Section 16(2), it makes your ITC ineligible. We shall discuss it in details. Okay, it makes your ITC ineligible. Section 122, it relates to penalty. It is a penalty section, and this penalty is leviable both on the issuer of bill and on the receiver of bills. Both shall be liable to pay. The issuer shall be liable to pay 100% of the tax amount, and the receiver shall also be liable to pay 100% of the tax amount as penalty. Your ITC might be blocked, you might be summoned, there might be inspection, search and seizure of your premises. Finally, there might be arrest in certain cases. There are limits set up for that, but there might be arrests. So these are the basic consequences of fake invoicing. Now, let us discuss section 16. See, section 16 is the parent section, which discusses about the eligibility of taking any input tax credit. Okay. Section 16(1), it says that ITC is available for if the same is being used for any furtherance of business. Okay. Section 2, subsection 2, 16 subsection 2 lists out certain conditions which has to be complied, and if it is not complied, the ITC shall be considered to be ineligible. Okay. So if any registered person has to comply with all these conditions to make, otherwise the ITC has to be reversed if claimed, and if not claimed, it cannot be claimed at all. Okay. So out of this, the first condition is he should be in possession of any invoice. So in case of fake invoicing, invoice is always present. It will be basically present better than a genuine person. So there is no issue of non-compliance of this clause A. Clause B, we are not discussing clause AA and BA. Clause B, he has received the goods or services or both. That means there has to be actual delivery of goods, physical delivery of goods. Okay. So that is absent in fake invoicing cases. So this is the basic section which is directly hitting the fake invoicing cases. Receipt of goods. Tax has been paid. Clause C. That means the tax which is there in the invoice has been actually paid to the government. See, the language written here is actually paid to the government. That means the government should have received the tax. So this is also directly hitting the fake invoicing section. He has furnished the return in the section 39. So return has been furnished. That will not be an issue even in fake invoicing. Excuse me. So basic two provisions which are impacting fake invoicing cases are clause B and clause C. That is receipt of goods and tax has been paid. Okay. Okay. Now next, ITC can be blocked. If there are any issues of fake invoicing, ITC can always be blocked. Someone might be there wherein questions might be asked and unnecessary harassments will happen. Arrest provisions. See, there are some limits set up by the Act above which the case becomes cognizable. That means it becomes a non-bailable offense. The limit is where the ITC on such fake invoice is greater than 5 crore. That means ITC availed on the basis of fake invoices, if it exceeds rupees 5 crore, then jail up to 5 years and the offense is cognizable. Okay. If it is 2 crore, greater than 2 crore, less than 5 crore, jail up to 3 years, and it is non-cognizable, that is, it is a bailable offense. If it is greater than 1 crore, less than 2 crore, jail up to 1 year, and it is non-cognizable. However, if the ITC is less than 1 crore, there shall be no arrest. Arrest provisions are not there if ITC is less than 1 crore. Okay, very clear. Now, we as professionals basically confront certain situations in these types of cases. Whenever a person comes to our premises, see, whenever a person comes, he always says he's basically honest and he's being fixed by someone. But it is our duty to understand what type of person he is and whether he has defrauded the revenue or not. Okay. So what are the situations which we might encounter? First one is client is not genuine. We are clear in our mind that the person is not genuine. Okay. In these cases, please, this is my personal opinion that we should not accept the case, because he has done serious harm to the economy. Client is partially genuine. That means he has done some mistake, but the mistake is not so grave. And he's trying to rectify himself. He wants to rectify the mistake. In that case, we should guide him as to how the loss can be made good to the government by paying taxes with interest and penalties, and by taking the department into loop, and then fighting the case and defending the case for him, so that he can actually lead a honest life in future. So in these cases, we should always try to help the person. If the client is fully genuine, please give a full-on fight. Because but for this, we have to be convinced that the client is genuine based on his documents, his conduct, and basically our professional judgment and experience. Let us come to some case studies which will make us understand these things in a better manner. Case study 1. Company A purchased from company B. Okay. However, company B turns out to be non-existent, in spite of the fact that company A has actually received goods from company B. Company B supplies to company A. Okay, company B is the supplier, company A is the purchaser. There is an actual transaction of purchase and sale of goods. This is an actual transaction wherein the delivery of goods has happened, payment has been made, and A is clear. A has purchased the goods. But B turns out to be non-existent. Non-existent means at the time when the goods were sold, he was there, his office was there, but maybe he had some bad intentions. So he turns out to be non-existent at a later stage. Now, what is the liability of company A in these cases? Commonly, what is happening is that in such cases, the department is also demanding tax from company A, which is not at all correct. At least in my personal view, it is not correct, because company A has no collusion with company B. Company A has genuinely purchased the goods from company B, who is an authorized agent of the government. Means any GST registered person is an authorized agent of the government to collect taxes on behalf of the government. So if any fraud has been perpetrated, it has not been perpetrated against company A. It has been perpetrated against the government by company B. So why company A be penalized for such frauds if there is no collusion? However, if any collusion is proved, then it is a case of fake invoicing and a fit case for company A to be penalized. But in this case, if everything is clear, it is not correct. However, how can we save ourselves? What basically actions we can take to basically defend ourselves in such situations? Okay, invoices. We should always collect original signed invoices. Okay. Lorry receipts. That means the transportation vehicle which is carrying, we should keep its receipts. Toll gate documents. One of the most important document is toll gate. If we can prove that the goods have crossed a particular toll gate, which is towards our destination on the date where it should be, when it should cross it, basically, or some nearby date, I think that is the best proof you can give to defend section 16(2)(b). That is receipt of goods. Fast tag data, okay. E-way bill data. E-way bill should be generated and all details should be very correctly filled out there. GSTI two-way reconciliation data, now it is 2B. So this reconciliation should also be there. And on a monthly basis, nowadays, actually, this is not a big issue because we can claim ITC only through 2B. So when it is claimed through 2B, basically reconciliation is happening in this count. But still, we should be vigilant as to the invoice number and other details which are being auto-populated in GSTI 2B. Copy of purchase order sent to company B. Okay, because when we purchase, a purchase order is being sent. So that should be there. And if it has been sent by email, that email copy can be kept. Account confirmation. Company A should always seek account confirmation from company B, duly signed and sealed by him, so that at any future date, he has the correct data with him. Stock register. Stock register is normally maintained, and basically, with the help of stock register, we can prove that the goods have actually entered the godown. Stores inward data. Okay, stores inward register we all keep, and basically it is a valid proof. Bank payment data and payment receipts. So normally payments are made through bank nowadays. Cash payments are very less. So if bank payment is there, we can always give the bank statement from where the money has gone out. So these are the basic documentation requirements, basically, which we should always maintain so that we can avoid any possible cases of victimization of a genuine person. Okay. Next case study. A purchased from B through C, who charges commission for the transaction. Means I approach C that I want some goods, and he arranges those goods from company B. Okay. Now, what happens in these transactions is that company C, Mr. C is also a fraudster. What he does, normally, he cheats Mr. A by sending him goods, but sending him goods are going to him actually. Physically, goods are being sent to him, but invoice is being routed through a non-existent company. So company A does not know this thing because he's paying to company B, and according to him, goods are also coming from company B. But actually, there is a possible, not a possible, there is a contravention of that in these cases, and they are defrauding the revenue. But what is the liability of company A in such cases? Because what is his fault? In this case, he has genuinely purchased the goods, knowing them to be true and correct. Now, whatever action should be taken, that should be taken on B or C. But again, this is not happening. In many cases, B or C are not being traced, or they are some very small time people who don't even know that they have a GST registration in their names. Evidence to be gathered, commission payment details to Mr. C, that should be taken up. Any other proof that the transaction was facilitated by Mr. C. If you can prove that it was facilitated through Mr. C, it becomes a very good defense for you. Okay. Case 3. Company A sold goods to B. However, company B turns out to be non-existent. Now it is a ulta case. Reverse. The seller becomes non-existent. Suppose company A sells to company B. Company B has genuinely purchased the goods. Okay. Now, company B turns out to be non-existent. Means company B was a fake company. Basically, it has dealt with 90% cases where it is traded invoices. However, 10% cases it is genuinely purchased goods. So the government, the department is not in a position to identify which how much is genuine or and how much is fake. So the entire company is normally regarded as non-existent in such cases. So now a doubt goes to company A that if company A has sold goods to company B, that means company A is also dealing in fake invoices. Normally this apprehension happens because if company B is completely non-existent as per the contention of the department, then the bill issued by company A to B is also not fake. So in these cases, these cases also happen. So in these cases also, we should always maintain these data so that whenever notices come up, we can always defend such cases in a very better manner. Now, there are some issues pertaining to fake invoicing, which we shall take up. Company A issued invoice to company B without any supply of goods or services or both. Okay, there is no underlying goods. What is the liability of A and B? Okay, in this case, both are the culprits. Both have collided. So what is the liability of A and B? Company A issued invoice to company B without supply. Okay, company B utilized the ITC and issues bill to company C with underlying goods. That means in this case, company C is genuine. Company C has genuinely purchased goods. Okay, so what is the liability of A and B in this case? Now, major query here is what is the liability of company C here who has genuinely purchased goods from B? That is the major issue which is affecting fake invoicing cases. We are not concerned about A and B because they have collided and they have done wrong and they should be punished. But the problem here is Mr. C who has genuinely purchased goods from Mr. B. So what will be done with him by the department in such cases? That we'll discuss. Now, when these issues, the case 1 and case 2 which we have discussed, these issues were normally coming to the department and many queries were raised. So what the department did, they issued a circular 171/03/2022 dated 6/7/2022, wherein it covered 2 to 3 cases or situations, and it narrated as to how action should be taken against them. The first case was A sells goods to B without goods. Okay, there is no underlying goods. Whether tax can be recovered from A, whether penal action can be initiated. So it is saying here that A is selling goods to B. However, there is no underlying goods there. So now whether tax which was there in the invoice, which was traded, whether tax can be recovered from Mr. A. The circular says that in such cases, there is no supply of goods or services. So when there is no supply of goods, it cannot be regarded as supply under the provisions of the GST Act. So if there is no supply, there cannot be tax. If there cannot be tax, because see, tax can be collected only as per the provisions of the Constitution of India. Basically, the Constitution doesn't allow, it will be unconstitutional because see, if the goods are not termed as supply, if the transaction is not termed as supply, tax cannot be recovered because Section 7 will not be affected in this case, will not be triggered in such cases. Okay, so tax cannot be recovered from A. However, penal action under Section 122 can be initiated against him. A sells to B. This is the second situation. Without goods. Again, there is no delivery of goods. Now, B sells to C with goods. Whether tax can be recovered from B. Now, again, in this transaction, when B is selling to C, there is a underlying goods there. But now the question is whether tax can be recovered from him. Is it not supply? there is a supply here. There is an element of supply here because, see, in the first case, there was no supply as there was no underlying goods here. In this case also, in the first transaction, there is no supply. So tax cannot be levied from A. It can be levied only from, it can only levy penalty. However, when B is selling to C, the transaction is a transaction of supply of goods as per the GST law. So tax can be recovered from B here in this case because it is supply. Okay. However, he can also be penalized, and he will be penalized basically. Now, again, the third situation, A supplies to B and B supplies to C without goods, all without goods. Now, whether tax can be recoverable from B, again, no, because there was no actual and physical supply of goods in such cases. So, the circular has very rightly listed out 3 situations, which is a welcome step. But it very conveniently missed out one very important situation, that whether tax can be recovered from C. In the second case, whether tax can be recovered from C who has genuinely purchased goods from B. That has been left out in the circular, which should have been covered by the circular if it would have attempted to address the genuine issues faced by taxpayers. Yes. Now there are some issues, some more issues in the circular. What happens if A sells to B without goods and B with goods, B to C with goods, whether C can be penalized and ITC disallowed? We have already discussed. This cannot be done. Should not be done. And Honorable Supreme Court has in an n number of cases in the earlier regime, not in the GST regime till now, it has mentioned that you cannot force a person to do what is impossible. What happens if tax already recovered in the chain? Suppose A sells to B, B sells to C, C is genuinely selling to D. Now tax has already been recovered from A by the government by enforcement action. Now can tax be again recovered from BC? No, tax should not be recovered from BC. But how will you know whether tax has been recovered or not? Because normally what happens whenever there is a case of fake invoicing, basically alert notices move on to all parts of the country that these are the suspected recipients of invoices, so please take actions against them. Now, when the department which has issued such alert notices, they recover the tax from the person. Now, how can they ask the other person, the person who has received, to again reverse it? So will it not be double taxation? These are issues. But legally, they should not. Legally, also, I'll say, because there are many provisions which will guard it. Because, see, once tax has been collected, you cannot again collect it. Penalty you can collect. You cannot collect tax again. How to ascertain whether tax has already been paid if honest purchaser is purchasing goods? Is there any mechanism in my hands to ascertain whether tax has been paid? There is no such mechanism. We are not being allowed to pay it under RCM. We cannot pay it under RCM. We have to pay it on forward charge only. So that is one issue. Now, what happens in such cases if the commissioner feels that for protecting the interest of the revenue, provisional attachment of properties is required? It may also go to that extent. And it may also go on to attach the properties of the person who has assisted this person in such frauds. Okay. However, such provisional attachment orders are ineffective after a period of 1 year. Okay. Now, one more problem. These fake invoicing cases, these have been identified by the Income Tax Department, and a very good, provision has been inserted in the law under section 271 AAD, which says that in case of any false entry, penalty equal to the aggregate amount of such false entry shall be levied. Okay, penalty equal to the aggregate amount of such false entry shall be levied. So if the bill is of 1,18,000, if the bill is of 1,18,000, penalty of how much will be levied? 1 lakh will be levied. Because we are claiming expense of how much? 1 lakh rupees. So that entire amount will be taken as a penalty. Now, what is the definition of false entry? Forged or falsified documents such as false invoice or in general a false piece of documentary evidence means a false entry is defined to include use or intention to use any false document, invoice without supply, invoice from a person who does not exist. So basically B and C are normally similar, that is without supply, because if the person is not existent, there is no supply. So B and C are basically similar, but for more clarity, the points have been segregated. So income tax will also levy huge penalty, and it is more than penalty under the GST Act. 100% of the invoice amount. Now, under the erstwhile regime, there have been many case laws which has basically said that you cannot force a person to commit to basically do something which is impossible on his part. So to ensure that the tax has been paid is always impossible for a taxpayer. How can he ensure that tax has been paid? Suppose he ensures that tax has been paid by his supplier. How can he ensure that the tax has been paid by the person from whom your supplier has purchased? It is practically impossible. So that is not possible to ascertain, but the department in these present times is basically not accepting that plea. There have been case laws. Arise Industries case was there, which was first of all it was pronounced by the Honorable Delhi High Court, and then it was basically I'll say it was accepted by the Supreme Court because the petition appeal petition was rejected on technical grounds, not on merits. But yes, the Supreme Court didn't take up the appeal application, so it was basically, we can say that that is the law. And that is the pronouncement of the Honorable Delhi High Court. So, under the erstwhile regime also, courts have ruled in favor of the SSC. However, even in the GST regime, the courts are understanding this issue. In these cases, PR Money, DY Bethel, Ranganathan Vials, LGW, Bright Star, Sanchita Kundu, these cases, courts have always favored the SSC. In DY Bethel, the Honorable Madras High Court has categorically said that without taking any action on the perpetrator, how can you even approach the honest person or the buyer of goods? First, take action on the perpetrator of the crime. Then you may think on this person. In Sanchita Kundu, the file was sent again to the officer for reassessment based on the document submitted by the SSC. Very recently, Gargo Traders versus Joint Commissioner of Commercial Taxes in Calcutta, the Calcutta High Court, basically it was a case where the registration was cancelled of that person, and it was said that the supplier of goods is non-existent. However, when the person has purchased goods, he was a existing person. So the court said that that cannot happen. Without proper verification, it can never be said that there was any failure on the part of the petitioner to comply with the law. And the articles have been, the purchase transaction has been done on very genuine terms by the buyer. So the levy or the ITC should not be disallowed basically. Okay. So courts are favoring the SSEs, the honest SSEs, basically. But still there are some issues in these cases which must be taken into cognizance, or basically the problem is with genuine taxpayers who are made to suffer in such cases. Now, when these are audit seasons. Now the tax audit season has arrived, even the tar utility has been released. So there are some issues which we should always keep in mind pertaining to fake invoicing, because every now and then nowadays notices are issued and there are implications in our tax audit. Okay, so what are the implications? Both purchase and sale are fake. If both purchase and sale are fake, then huge issue. We should either not do such tax audits, and if we do, we should severely qualify such tax audits. If we are basically sure that yes, this case has happened. In these cases, money laundering is imminent. There is no true and fair view, and penalty under 271 AAD is sure to happen. Now, in this case, sale genuine, purchase fake. Purchase is fake and sale is genuine. So purchase is not an allowable expenditure under section 69C. So purchase will be disallowed and it should be reported. Money laundering imminent. True and fair view again. Is there a true and fair view? No. Yes, of course, materiality aspect has to be taken into consideration. Penalty under section 271 AAD applicable. There are some small issues basically in tax audit which we need to identify. Expenditure by way of penalty or fine for violation of any law. There's some clauses in our tax audit which we should always keep in mind. I will not discuss them in detail, but these clauses we should always see and we should report, because these things are normally hitting every client. This clause 41, details of demand raised or refund issued, basically not cases of show cause notices, but where order has been passed, order has been confirmed by the adjudicating authority. These should be reported here normally. What is the role of a chartered accountant or a professional in tax audit cases? We are basically asked to report under Form 3B or 3CA, 3CB or 3CA. Okay, and we have our independent auditor's report. So these three reports, whenever we are auditing, we should always keep basically devote our entire energy in these three forms to the extent possible. We should give all such information which are necessary for the basically fair conduct of this audit, and to make the regulatory authorities aware of the actual situation in this audit. Okay. My piece of advice in these fake invoicing cases is that, because we are talking about a genuine purchaser, genuine businessman who genuinely purchases goods. Now, how to do your due diligence? First of all, whenever you purchase goods from a new person, always make his due diligence, always make your due diligence and take his KYC. Verify his KYC. If possible, meet him personally. Many companies are nowadays blocking ITC, means they are not releasing the ITC money unless and until it is coming in the 2B. Still, if it comes in your 2B and after that he is non-existent, still there is a problem. But still, at least it has to come in your 2B. After that, you can release the money. Likewise, you can also basically make the department understand that, see, we have blocked his money until unless he has paid the tax amount. Basically, how will we know that he has paid it? We will know only through a 2B. That because nowadays it is not so easy to play between 2B and basically GSTR 1 and 3B. Because once someone uploads his bills in GSTR1, it gets auto-populated in 3B. So if we pay after coming in 2B, I think that is a very good defense in our hands. Proper documentation, as discussed by us. What are the proper documentation? See, fast tag data is a very important weapon in your hand. Always keep fast tag data with you for all trucks, for all transactions, because that will save you in times of difficulty if you are a genuine and honest person. Your invoices, original signed invoices should be there. Bank payment should be made. And still, after doing all this, if you receive notices, you have to defend yourself vehemently. You may still receive notices even after following all these things, but your case will be highly strong in such cases. Because in such cases, the department can only say that tax has been not paid. But then comes the doctrine of impossibility. That I cannot be asked to ascertain whether the supplier of my supplier has paid tax or not. That is not within my purview. I even cannot ascertain whether my supplier has paid tax or not. So our role in tax audit and audits basically should also be to guide the person as to how he should conduct his business transactions so that he doesn't become a victim of some unscrupulous people. So this is what I had to deliberate in this fake invoicing issues. If there are any queries, you can put it in the YouTube channel. We'll see if we can answer the same as and when possible. Thank you so much.